What's up, everyone? Excited to give you this video today about Block, formerly known as Square. So, huge company here, but I want to cover this news first before I jump into the whole video. But just to give you a breakdown of what I'll be covering today, I'll be covering this recent inclusion in the Russell 1000 growth, which has massive effects, and I'll explain that. I'll go over a couple risks I see to this investment, and then I will go into the chart, give a price prediction, and then I'll jump into some of the financials and fundamentals of this company. But with that being said, let's start it off. So for Block here, Block was the fifth largest addition by weight into the Russell 1000 growth. So obviously it's not a huge weighting here, but the the pace and the direction of being added rather than being taken out is always a good sign. And to be frank, with so much passive management throughout the stock market, this will have massive effects. Because to kind of tell you how passive management works is basically your JP Morgans, your Vanguards, your BlackRocks, they have funds that literally just buy exactly what the Russell 1000 buys and holds. So, yes, it's not a huge weighting here, but you have to consider what's happening at Vanguard, what's happening at BlackRock, because they're all mirroring this buy, right? So, yes, it only went up a, a little bit here, but it's going to go up in every single fund that mimics this Russell 1000 growth fund. So, it is a great sign. It is a good sign that the passive managers that aren't trading in and out based on news are kind of buying hand over fist here. I mean, it's the fifth largest ad in the Russell 1000. So definitely important. Although I understand this isn't like something sexy to cover, but it is good to see that passive management is rolling money into Block. But with that being said, let's jump into this bearish article that I saw on Square. Honestly, I don't agree with a lot that's in here, but I do think it's worth noting it. So we got the Hindenburg research note a couple weeks ago. If you're an investor in the stock, you probably already know about it. But basically, they were just accusing Block of allowing fake accounts to be launched and having some type of fraudulent process through their Cash App, which is obviously a big deal for the stock Cash App. But I wanna really note here that nothing happened from this. There wasn't any probe by the U.S. government. No investigations. Nothing. Just a piece of paper from a short seller. So obviously, Hindenburg Research makes money going short stocks. So they'll go short a stock and then put out a research note saying why they are short. And at the end of the day, they're very self-serving with these reports, right? If they're short a stock, they're not gonna, you know, write a fair report. They're gonna put a bearish spin on everything that they say, and I think that's what they tried to do. But I don't think they have succeeded because there hasn't been any U.S. government, any of the feds getting involved and saying, hey, we need to look at this. So they likely already have looked at it somewhat, at least from a high level, and decided that there was nothing there. Obviously, that's just my opinion. But that I do definitely believe that. And then I want to cover one other point. So people always, kind of wonder what is Block's involvement with crypto, right? Obviously, they changed their name from Square to Block, and it's a couple other things, but I do want to make this one point. So Block owns 8,000 Bitcoin, which is worth about 216 million right now, which obviously isn't a crazy amount when you consider that this company is worth over $30 billion, but it's nothing to sneeze at, I mean, 8,000 Bitcoin could easily turn into a heck of a lot of money if a couple of these price targets, which people have, come true, right? So let's say Bitcoin jumps to 500,000, which is there's people out there that think that, that same $200 million position could be worth $40 billion. So it's really is nothing to sneeze at, and I wouldn't kind of write that off. Oh, excuse me, $4 billion. My apologies, but still a significant amount of money. And it's personally, I like crypto stocks. I like crypto correlated stocks because I'm bullish that general sector. So I think that correlation that Square has with crypto is actually going to help the company in the long term. And I'll jump into the chart here and give my price prediction. Then I'll go into some of the fundamentals of the company. So the stock has had trouble breaking through this 200-day moving average, which basically coincides, with the 100-day and the 150-day moving average. So we've had some issues breaking through these moving averages, and we got the 50-day moving average crossing below the 200-day moving average in early May, which is called a death cross and is a signal of bearish momentum. So not a great sign there, to be frank. Definitely don't love to see that if you're a short-term trader, but if you're a long-term trader, it's not the biggest deal, or a long-term investor, I should say, it's not the biggest deal. But when we look at the last time we got a death cross, the last time the 50-day moving average crossed below the 200-day moving average, well, that was in mid 2021, and obviously shares went from about $230 to $90 in just a matter of a couple months. So definitely not seeing great signs in terms of technicals for this stock. Just to be completely sober and frank about it, I don't sugarcoat things. I don't tell people what they want to hear. I just tell them what I think. And what I think here is that the chart looks pretty poor. And that's just my opinion, not financial advice. So obviously, so do your own research in D&D, but I do believe that this 50-day moving average could provide some support. So really three levels of main support here. So this 50 DMA, and which we came down to on Friday and bounced off of, bounced about $1 off of that 50 DMA, which sits at about $61.60. But we have pretty big support, pretty major support at 58, which is where shares had bottomed in May. It's where shares had bottomed in late March. It's also where shares had bottomed in late December of 2022. But the real major level of support is at $51, which is where shares had bottomed out in November, October, and late September of 2021. So that is a significant level of support. I would consider this $57 to $52 level a good buy. Excuse me, a good buying range for the stock. So if you're a long-term shareholder, you like the stock long term, this buying range could be a good one for you to accumulate some shares and add to your long-term position, because quite frankly, I like the stock long term. I like the fundamentals, and I'll jump into those numbers in a second. But in terms of my price prediction, I think we likely come down to this buying range at about 57 to 52, probably closer to 52 to be frank. I think we come down to this level and hold this support level at about 52, $53, and likely move higher over the coming months. Obviously, just my opinion, not financial advice. Do your own research. But with that being said, let's jump into some seasonality trends. So this screen here shows me which months the stock typically does best in. And, as we come down to that major level of support, we can see that in June, the shares typically rise 8.3%. But in July, shares typically rise 26%. So the best seasonal month for the stock is July. And as we come down to that support level, I believe this seasonal trend combined with support could help push shares higher. So definitely a good sign to see that, we're in a bullish seasonality trend for the stock. Obviously in August, shares jumped typically 6% on average, and then September is almost a net negative, and October is almost a net negative, and then November is once again pretty bullish. So, put it all together, coming down to a major support level with bullish seasonality trends should help provide some support to the stock. And then this is Seeking Alpha here. It puts valuation, growth, profitability, momentum revisions, all relative to peers. So I really do love this tool. And I don't have a partnership with them. I just think it's a great tool. So I'll kind of run through what I'm seeing on my paid subscription here, which does cost me a good amount of money. So PE is at 51 times. So obviously significantly above the sector median at 8.2. This is pulling in as a sector of financials. Obviously, this is more of a fintech play, so it kind of looks a little worse than it is here. And I would really compare it to the market multiple, which is about 25 for the S&P 500. So we're almost double the market multiple for the S&P 500. So the stock is pretty expensive any way you slice it. But I'm about to go into the growth, and that growth kind of rationalizes things. But let me stay on task here with valuation. So EV to sales looks pretty good. Excuse me, price to sales looks pretty good. PEG ratio, which is price to earnings growth. It's PE basically divided by growth. So pretty good there. 1.3 compared to the sector median of 1.15. So basically in line there. And then what I really like to see is the price to book ratio is 2 times, which basically just means the market cap of the stock is 2 times the value of the assets on its balance sheet, which honestly is really, really good for a fintech company. I would say this should be like an A here, but it's pulling from the financials sector, which obviously that's the banks, right? J.P. Morgan, Goldman Sachs, who have price to book ratios around 1. That's typical for banks. So if you were to put it relative to fintechs, this is a very, very good level. So I would say this D minus should really be like a C. So not too bad here. Really do think the valuation metrics here look better than most people think they do. But what I absolutely love is that the growth is tremendous for this stock. It's being given an A plus grade. You could probably bump this down a bit because it's obviously comparing to the financials, but still a very, very good growth rating for the stock. And anytime you see shares or any company trading at a high valuation, you always, 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 always need growth to rationalize that valuation, right? The only reason people would ever pay up for an income stream of a company is because that income stream has a high probability to increase, right? And that's growth, right? So good to see that growth is rationalizing valuation. Year over year revenue growth was 12%, and the forward revenue growth, forward just meaning over the next 12 months, is 9%. So definitely good there. And then, you're really seeing leverage cash flow growth up 171%. Love it. Free cash flow growth per share up 40%. Love that too. So very, very good to see there that we're seeing growth rationalize that high valuation, which is absolutely super, super crucial. Gross profit margin 34%. Obviously, this is pulling in for the financial sector, so not that good. But 34% isn't horrible. It isn't great, to be frank, but I wouldn't say it's cause for concern. And basically, for those that don't know, gross profit just basically means revenue minus cost of goods sold. So it's kind of just what you make from what you sell. So 34% ain't too bad, especially for a company that's growing very quickly. But what I really love about this, one of my favorite metrics I'm gonna cover, honestly it might be my favorite metric here, is cash per share. So we have $8.40 of cash per share, which is over 10% for the company. It's about like 12 or 13% of the market cap is just in cash. So when you add up the price to book value is at 2, you add up that the cash per share is 12% of the market cap. So 12% of the stock is in cash, which obviously that's very firm, and that gives investors with that value lean a little more safety and peace of mind, knowing that you have a stock that has a good amount of assets on its balance sheet, right? So in cash per share and price to book ratio really do give you good measurements of the amount of assets the company has on its balance sheet, which in this case, Foursquare, is immense. So love to see that. Love to see that the growth is really rationalizing valuation as well, and we have a good amount of assets on our balance sheet to kind of make us feel safe in this investment as markets kind of falter here. But with that being said, let me jump into revisions here. So this basically shows me how many EPS up or down revisions we've gotten over the past 3 months. Same thing for revenue. And for those that don't know, analysts, covering analysts, so there's a JP Morgan analyst, there's a Goldman Sachs analyst whose job is to project EPS and revenue for the company. So we have 20 different analysts moving their EPS revisions up compared to just 13 analysts moving their EPS revisions down. So net, you're seeing 7 new analysts move their revisions up. So net EPS over the past 3 months, Wall Street has become more and more bearish. And when we look at revenue, it's a knockout number. So net, we're seeing 27 up revisions relative to down revisions. So in the past 3 months, this definitely can tell you that Wall Street is becoming more and more bullish on the stock, which is a great sign. It's a great signal for Square as a whole. So with that being said, I'm bullish block long term. I think technically we could be running into some issues over the next couple of days, but I do think around $53, $55 is a good buying level as we come down to test major support. So that is my opinion on block. With that being said, I'll end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.